Hello, Ivan. So where are you from? Oh, great, Singapore. So it's my neighbor. Okay. So I think I will start now. Okay. First of all, I welcome you all to be here, and hopefully you all learn something new here. So let me introduce myself. So I myself actually is the full-time trader for the past I think 7 years. So I am a trend trader, which is mid-term to long-term swing. I do swing trade a lot, and then I trade forex, cryptocurrency, and also stocks market. So today I will be sharing with you all about what is CFD. CFD trading actually, I think it just open for the Singapore app. I think HK Hong Kong app doesn't have this trading function. So maybe those from Hong Kong, you all can learn about what is CFD, and I will share about how to trade and maybe some strategies behind. So stay with me here, and thanks for supporting this live session. So welcome, Lian Mu. So who is new in trading here, or who haven't start trading or invest before? It's okay, so I will just start now. So today's titles will be introductions to CFDs. So what actually is CFD? Actually, CFD is a contract of difference. It is a derivative product where traders speculate on price changes without owning the actual asset. So what it means by without owning the actual asset? So in CFD tradings, actually you don't have to buy a stock to long or short the market. So if you buy a stock, you own the stock, right? But in CFD, you don't have to own the stocks to trade up and to trade long or down. So this is the concept of CFD. So I will start briefly with the history. CFD actually developed in London. It is created by a London investment bank, and it is used by the hedge funds to short sell the stocks in a cost-effective and tax-efficient way. How did they do that? It's because they don't have to own the stocks to short sell the stocks. Usually, if we want to short a stock, we have to own it and then short it. But with CFD, we don't have to own the stocks, and so that we can directly short the stocks. So it's invented by Smith New Court. Actually, it's one of the UK broker firm, and then it later acquired by Merrill Lynch, which is one of the famous investment bank in US now. So it allows institutions traders to speculate on stock prices without physically owning the shares. Key concepts in CFDs. So for about its derivative nature, CFD derive value from underlying assets but are not the assets itself. What it means by this is it's a price. You can think that it's a price that mimic the price of the certain stocks. So the brokers create another platform to let you trade the stocks up and down without owning it. So you just trade the prices only. Let's say you don't have to own, let's say you can trade Bitcoin, one of cryptocurrency, yeah. So you don't have to own the Bitcoin, and then you can long or short in CFD. So CFD actually provide leverage. I'm sure that you all heard a lot about leverage in trading world. So CFD typically allow you trading on margin, so you can control a larger position with less capital. In uSMART Singapore app, there's CFDs of forex pairs, so the customers can use up to 20x leverage. So if you deposit $100, actually you can use up to 2,000 USD with leverage. So in CFD, you only do two ways of trading: long or short the prices. Okay, so who knows which one is more risky, long or short in the market? Anyone can share your opinions? So which one is more riskier, long the market or short the market? Short the market is riskier. Why? Okay, Ifan, yes, short. Actually, short is very risky in the market. I'm long, the sky is the limit, but short can go to zero. Yes. Yeah, in history, on average, the long trade or invest actually is more profitable than short trade. So you all might have been heard about the Michael Burry, right? The big short. Actually, he just, I think, earned around 4x in that short. But the past performance over the 10 years bull market in S&P, he actually didn't really win Warren Buffett. So he just famous on that, the big short. Okay, why short is very dangerous? It's because the short risk is unlimited. If you long a position, let's say you put 100, when the price drop to 50, you long at 100, you actually just lose 50%, right? And then you at max, you lose 100%. But for short, the sky is limit, but in the other way. Because when you short at 100, when you go up to 200, you lose 100%. So when you went up again, you lose 200%. Then when it goes up again, maybe 300, you lose 300%. So short actually is very risky, and on average in the investing world, I mean investing, yeah, in the longer time frame, short actually is not so profitable. But it doesn't mean that we don't do shorts. It's just a statistic that if those people that are unskilled traders, they usually will fail in shorting the stocks or any price assets. So don't simply do shorts. Okay, so for long, we actually profit from rising prices. And for short, we actually profit from falling prices. For your information, for maybe there's beginners here, what is short? Short actually is like you own a house, you sell it, like maybe you think it will drop, so like let's say the price, the houses now is maybe 100,000. You speculate it that it will drop to 50,000. Then you sell it first at 100,000 and then you buy it back at 50,000. So by doing this, you are short selling your houses. So you can, if it really drops to 50,000 from 100,000, you actually profit 50,000. This is how you earn from shorts. So in short, you actually have to own the asset first. So you only can short it because you have to own the assets to sell it first and then buy back. So in CFD, you don't have to own the assets, like you don't have to own the houses first. You can directly short the market without owning the assets. Okay, then I continue. So type of markets for CFD. In the markets, there are a lot of types of assets, trading assets using CFDs. Stocks, indices like Nasdaq, SPX, 500, Dow Jones, or maybe A share, or any KLCI, SGX index, and many things. Yeah, for the common one will be the commodities, gold, oil, platinum, silver, etc. And the famous one I think is Forex currency pairs, which usually provides a lot of leverage. For uSMART Singapore app, I think Forex provides around 20x leverage and now it's 0 commissions. And cryptocurrencies also used in CFDs. So we'll talk about the price movement. So this is the normal trading stuff. We buy a stock at $1. When it went up to 1.5, we earn 0.5 shares. So we earn 50%. When we sell a stock, which is short a stock, when it went up to when it went up to 0.5, you lose 0.5 per shares. So this is the long by when you buy, you need the price to go up. When you sell, you need the price to go down. When you sell, when the price goes up, you lose money because you have to buy it back at higher price. Okay, let's talk about leverage. So you all often hear leverage, right? Leverage involves using borrowed funds to increase the potential return of an investment. Okay, so in CFD, it will provide different type of leverage, depends on the broker. So let's say 3x leverage, you deposit 100, you can use up to 300. So here I state the examples. If a trader has $1,000, uses leverage 5x leverage, then he could control 5,000 worth of the stocks. He can buy the stocks up to worth 5,000 with only 1,000, 5x. So in this case, by using leverage, the risk and return is magnified. This is a very powerful stuff, and at the same time, it's very dangerous. So it is double-edged sword. You have to know how to control it. Many people say that leverage is very bad, but actually it provides and opportunity equals opportunity to help the traders to control a larger positions and to earn more price. So it's not the tools problem. It's the skills of trade. Is the skills problem for the trader. So you have to master the skill first in order to trade CFD. If not, it's very dangerous. You might as well trade or invest without using leverage. So what is margins? Margins actually is more or less same as leverage, but margin is the practice of borrowing money from a broker to buy stocks using the stocks as collateral. What it means by stocks as collateral means, let's say you own maybe 1,000 units share, 1,000 units of maybe Apple shares, then you want to open margins. So like maybe 3x margin. So you have 1,000 share, right? So you can buy up to 3,000 share by using margin. It's different with the leverage I mentioned just now. It's because this in margins you have to own the stocks first. Then you use the stocks as collateral to borrow more money from the broker. And usually there will be an interest. Yeah. And also margin call. If the price, let's say you borrow up to 3x, when the price maybe drop 30%, your portfolio already wiped 90%. So there will be a margin call to ask you to top up. So anyone experienced margin call before? Any traders here like trade leverage before? Yes. In which stocks? In which market? Stocks, cryptocurrency, forex, or commodities? Oh no. Never mind. Yeah, super expensive. Never mind. I will share with you how. Stay with me. In the end, I will share with you all how we trade as a professional trader. So how we control our risk, how we trade like a casino. You know, casino they trade based on probabilities, right? So how did we use those mindsets to become a profitable traders and maybe increase the winning rate in the markets? Okay, so here I will just share what is margin. First, explain what is margin. So suppose a trader wants to buy a 10,000 worth of stocks but only has 5,000. With a margin account, they could borrow the remaining 5,000. From this case, it is 2x margins. So now with 5,000, he borrowed another 5,000, which is add up to 10,000 worth of stocks. Then when the stocks increase by 10%, the total capitals will be 10,000 increased by 10%, which is 11,000. So he profit 10,000 with the margin, but he only owns 5,000, right? So total gains is 1,000 over 5,000 will be 20,000, 20% gain. So this is just the same concept as leverage. Okay, I think so far everyone's no questions, right? It's very easy. What is leverage and margin? There's only a slight difference between these two. We just use it to magnify the returns. At the same time, the risk is magnified too. Okay. So I will talk about what are the benefits of trading CFDs. As I mentioned just now, it can amplify your trading power with limited capitals. And you only use low capital requirements to access a wide range of assets. You don't have to deposit a lot of money. Let's say like you trade a stocks, right? Your cut loss maybe is 1,000. If you own maybe capitals like 100,000, your cut loss is 1,000. In this case, you can just deposit 1,000 into the broker, and you trade like let's say 100x with leverage 100x. You use only deposit 1,000, you can access 100,000 capital. So you don't have to deposit all 100,000 capitals to the broker, because sometimes we need to maintain our cash flow too, and it's the same that our cut loss will be 1,000, so we just deposit the 1,000 amount will do. So in CFD, we can make our capitals like more liquid. We don't have to move our money all into one broker. And also there is a risk. Sometimes there is a risk that the brokers might face the problem and bankrupt, right? So if you deposit all your money, like maybe 100,000, then it will go like that. But if you just deposit those you want to trade, like the cut loss you want to trade, so your risk can be mitigated. So this is one of the benefits of trading using CFDs, while you can access bigger capitals. So in CFDs, there's a lot of people, there's lot size. We use lot size. So what is lot size? Let's say for forex trading, a standard lot size represents 100,000 units for the base currency in a currency pair. The lot size is actually different in commodities like oil, others commodities, forex, cryptocurrency, other CFD assets. So in this case, I only explain forex trading. Its standard lot size represents 100,000 units. So a standard lot will be one lot. So I explain this scenario again. So if you have a capitals of 10,000 and you are using 20x leverage, you can control up to position size of 200,000. So it's 10,000 times 20 equals to 200,000. Assume you are trading a USD based forex pair. 100,000 units, a standard lot represents the 100,000 units. So with 200,000, you have the buying power of maximum 2 lots. 2,000 divided by 100,000 units, which is 2 lots. But with initial capitals like 10,000, you only can open 0.1 max lot. So you see the difference with the 20x leverage. You only need 10,000 to open a 200,000 capital, right? Okay, so I will continue. So I think everyone understand with this. If you all have any questions, please don't hesitate to stop me. Okay, if not, then we continue. So CFD has the ability to short sell and profit in both rising and falling markets. and it has hedging capabilities too, because you don't have to own the stocks. So when let's say you are buying stocks like Nvidia, so you are afraid that the market will fall, but you are looking good at long term, you can open a small short positions to hedge the market, to buy protection, like to buy insurance in case it drops, so you can profit from there and to cover the losses. Alright, use CFDs to offset the potential losses in others' portfolios. So this CFD is actually one of the tools that can benefit traders a lot. So next I will discuss about the risk of trading CFDs. Market volatility. Yeah, with leverage, if the market moves very fast, you can maybe get stop loss in a matter of seconds. So you have to plan your trades before entering the market. With leverage, you can earn a lot, but at the same time, you can lose a lot. So we need to know what is our strategy. Before enter a trade, we need to know what is our edge in trading. What is our trading winning rate? Yeah. So leverage risk, and when trading CFDs, there is also fees and costs, which is like the spread fees, overnight fees, and also commission on trades. So in this case, currently uSMART Singapore apps have zero commissions for forex trading. So you have to calculate all this in order to like maximize your profit potential. With CFD, you are having a risk of losing more than your initial investment, because when you leverage 20x, right, it just need to drop 5% and then your whole portfolio will be wiped off. So it is very dangerous. But with 20x, if it ups by 5%, you can earn 100%. This is the beauty of the CFD tradings. So in short, CFD actually is a trading tools provided by a platform to let you trade without actually owning the stocks, to buy, to long or sell the markets. So I have roughly explained what is CFD. Any questions here? Okay, I don't think anyone have questions. So let's continue. So basic CFD trading strategies. I will just explain what do traders do, what type of strategies traders have. So before we enter a trade, we as a CFD trader, we need to plan our trades, and we need to know what type of traders we are. Okay, there are different type of trader. Day trading, like open intraday trade, like open the trade in the morning or afternoon and close it before end of the market, end of the night. So this is what we call day trader, and then you have to stick to the rules. You don't carry the trades overnight. There's also swing trader. Swing trader usually like hold for a longer time. Maybe it depends on the trader preference. It can be 2 weeks, some even up to 1 week, some either up to months. It depends. But as a trader, we just want to earn the price of difference. So from A to B, sometimes it takes few weeks. So there's types of trader that trade this way, holding for days, weeks to take advantage of the market trends. So in huge trend, usually the swing trader will earn the most because he holds from A to B, while the day trader every time they went in, went out, and then the price getting high and high, and then it's very hard for you all to make an entry at high and then chase higher, and then when the market is very volatile, someone with leverage, you'll get hurt badly. But it still depends on what type of strategies, how confident you are, or what is the winning rate of your trading strategy. So all of these you have to plan before you make a trade. In the trading market, when you place the trade, everything is decided. Either you earn or loss. So the homework is before you trade the market. What homework did you do? What plan do you maybe survey? How confident you are? What is the lot size? What is the risk management? Why this? Why that? Traders actually is not a simple task. It's the hardest way to earn easiest money. Agreed? Anyone agree that the trader is at the hardest way to earn easiest money? Okay, sorry, I just saw the questions. If fun, any way to minimize losses for the short trading that already we have big losses? Long the same counter to hedge it or just cut loose? I don't recommend it to open both way. For each trade, I will recommend it to set cut losses before you enter the market. Before you enter the market, you have to know how much you are willing to lose. Without this, you are destined to lose in the long run. You cannot succeed in trading markets because in trading we have to eliminate our psychology. There's people that open long and short, but we never know. Sometimes it just went up very fast and then went down. Then both of your long and short get cut loss, get stopped out. So it doesn't make sense. And then in trading, we try to get rid of our emotions. If you doesn't trade with stop loss, I don't think there is a problem. But the problem is it will affect your emotions. If it affects your emotions, you will likely do stupid things like sell at low, buy at high, FOMO, fear of missing out, chasing. Like you will, if your emotion is not stable in trading, you will just do all stupid stuff. Agreed? Okay, I hope I answered your questions. You all can ask me about questions to be a trader. Okay, next, scalping. Very short-term trades of small profits, high frequency. For newbie, I personally don't like scalping because the risk reward is not great. Usually you can like earn a lot in a small matter of time, but it's not sustainable. You in out the market very fast. Let's say you usually for scalpers, they use a big lot size to trade the markets. Then let's say you buy one lot and then it ups a little bit, it sell, and then when it goes down, it up a little bit, it sell. It take profits. But with bigger lot size, it will affect your emotions. But it drops a lot. If you didn't cut loss, you will win like maybe 10 or 20 trades and then lose all in maybe 1 or 2 trades. So we don't want to have a mindset like this in trading. But this is for my experience. Doesn't mean that it doesn't apply from others people. And some other scalpers is also very profitable. Maybe this is not for me. You have to know your characteristic in the market, which trading suits you well. Because some people are more preferred investing, not trading. Because you want to buy in close eyes, you want to see the markets. And some people don't want to like trade so high frequency. Or it depends on your personality. So you have to know what type of trader you are. Everyone is different. For me, like I don't like become a scalper. I'm more to investing and trading this hybrid in mid long term. So some people use CFD to hedge the market, like maybe open long and open a small positions in case it drops. It really depends on everyone's strategy. Yeah? You have to know what plan you want, what goal you want to achieve in the market. Then you have to stay true to the strategy. To have that confidence, you actually need to backtest a lot in the markets and monitor it live. You monitor it live, you might not need to put the trades. Maybe you have to do journaling. Then if I enter this, what is the outcome? So next time if you see those patterns or at the entry point, you can have more confidence to enter the trade. Okay. So next I will talk about risk management in CFD. As I said just now, so how can we trade like a casino? So in trading, actually we focus on earning the profits. We want to earn a certain profit in a systematic way without like emotion trouble us. So first, I know you all heard a lot. Every trade, we all need to have stop loss and take profit orders. So we need to know before we enter, even in investing, before you enter, you need to know how much you can afford to lose and what is the target price. Sometimes in investing or trading, let's say you own a Nvidia, maybe you earn around 2x. Then when you hit 2x, you want the price band go up again 3x, 4x, and then eventually it went all the way down until you didn't earn anything, and then you cut loss at the low. Did it sound familiar? Anyone has experienced this? That you didn't stay true to your profit target. You always like when it went up, you always just hold it to the moon, to the moon. I think if you all experience this in stocks market or anything cryptocurrency or those stuff, this is actually a very newbie mistakes. But never mind, we can learn how to overcome it. Actually, just one word: don't be greedy. We need to compound our win for a long run, consistently. Consistent is very hard in trading, but we need to know how to manage it. So one of the ways is we put stop loss and take profit orders. Okay, next I will talk about position sizing in risk management. So we need to know how much we afford to lose. Let's say if you have 10,000 capitals. Each trade at maximum, I would suggest for trading, you at max you only can risk 1%. If you risk 2%, maybe it's still acceptable. I think 2 and above is not very good in trading, because it will affect your emotions. If you only risk 1% in each trade, you can afford to lose 100 times. If you risk 1% to trade and you lose 100 times, that means your strategy have problems or you have the problems. Okay, so keep in mind, position sizing is very important. You need to calculate how much you need to put in the markets, and then how much you when the market price fall to hit your stop loss, how much you will lose. So you have to plan your stop loss and take profit orders. So we don't want to over leveraging, because sometimes we need that capitals. We need a big capitals to open a bigger stocks positions, but our cut loss may be very small. So we have to use leverage in order to open the big position. But get back to the basics, we need to calculate our risk too, our total account risk. Alright. So next will be the risk reward ratio. So what is risk reward ratio? Risk is how much we afford to lose, and then reward, what is the target we want to earn. Let's say risk reward is 1 to 2, like maybe you got 10,000 account, $10,000 account, you risk 1%, which is 100. So if you are looking for 1 to 2 risk reward ratio, you wanted the trade to lose at most 100, and then but when you win, you earn 200. Alright. So anyone here trade before, and what is the common risk reward ratio you all use? Anyone calculate this? Anyone plan this? You all have to plan all this before you all enter the trade. Because as I say, once you enter the trade, everything is decided, either win or loss. What is the most important is what is the homework you do before you enter trade. Okay. So with you control 1% of the risk. So each trade you only lose 1%. Some people only use 0.5%. So imagine you have maybe, I think, 200k account, right? You are risking 1%, which is 2,000. But when you have a risk reward ratio of 1 to 3, you at max you lose 2,000. And then when you earn, you earn 6,000. It depends on your risk reward. So the higher the risk reward, the better. So you have to find those high RR, which is risk reward ratios and entry. So by using a smaller risk, you can have a better emotion control. Is it 1% cut loss may cause too frequent of cutting loss per trade? No, you have to calculate like maybe from you enter a stock at $1, your cut loss, let's say, is 0.9, right? You have to calculate the position size. So when you buy it at 1, when it drops to 0.9, those the position size you put will only cause you those losses will only cause you to lose 1% of your total capitals. So you have to plan the position size. There is a position size calculator. You just search in Google. You just search calculator profit position size calculator. Yeah. Then there's a lot of calculator there. You have to plan. You put your risk, you put your capital, and then it will calculate for you. Oh, it's not 1% of the stocks. You only focus on manage your fund. Okay, understand? So with 1% loss, you can control 100 times of lose. So if you can lose 100 times, that means you are still not qualified to be a trader. Yeah. So this is a common mistake by CFD new traders. They get hyped with the leverage, over leveraging, ignoring fees, didn't count it. Emotional trading, because with larger fund size, you tend to go all in, like go full margin, because you want to earn a lot, you want to earn fast. So tips for getting started, you have to start with demo account. Many people say demo account is not good, but I think it's a good start to feel the market first. Although didn't use the real capitals, but I still think you have to try demo first, at least for 3 months. Then you have to learn continuously and trade with a plan. So for this plan, everyone is different. Like I said, everyone have different mindset, different personality. So you all have to find which strategy suit you the most. All right. Some people want to earn 5% per month. Some people want to earn 10% per month. Some people want to earn 20% per year or 10% per year. It really depends on your appetite and your fund size. So this everything you must plan. You have to treat it like a business. Okay. So you have to maybe do journals, track your progress, and your winning rate on average. Okay. Well, I will share with you all. Does uSMART has unity for US stocks? If yes, the finance charge, and I think there is US stocks CFD. You can search it on the uSMART SG account. You can open it. Do you have a uSMART Singapore app? You can consider to use. You can consider to use my invitation code or scan this QR on the right side, or you can consider to add me. This is the Telegram group I just created for those in outside of China, for those English user. So please don't hesitate to add and maybe ask me questions in this group. For those features, you all can look it at the website. uSMART, there is CFD tradings in uSMART app. So remember, just scan this to add or add me. Use my code to install the app or add me in WeCom. I don't think WeCom is very common outside of China. I think for English users, I think you all it's better you all join Telegram. All right. Okay, please don't leave. I still got one very fast presentations about using how do we do risk management. How do we plan our trade? Just a brief one. Okay. So you want to the QR code, please let me know in the comment section. I will. Now I have to switch to the Excel. Wait a while, yeah. Do you all see this Excel page? Okay, so this is one of the risk management calculator. So how did we actually plan our trade? Let's say you just put in your portfolio size. Let's say here is 10,000. So you are risking maybe 1%, 1%, which is 100. Cannot see. Oh, wait a while, wait there. Can see now? Okay, sorry. Okay, I continue. I will re-explain it again. So this is risk management calculator. So how you control your size. You have to plan your trade. You have to know your target. You are opening a business. You are doing a trading business. You have to know your fund, your risk, and your potential return, and how you get profit consistently over the time. So in this case, like let's say portfolio size, I put 10,000 initial capital. So for the green, you look at the green label. So the risk per trade, let's say I put 1%. For more conservative way, I actually encourage you all to use 0.3 to 0.5% only. Alright, so here I just put 1% for easier understanding. So the target per trade, the risk reward, maybe I just put 2 first. So you got 10,000 capital, and every trade you risk 1%, which is $100 in this 10,000 account. So every time I target 1 to 2 risk reward. Okay, what will happen here? So I also put the winning rate of 40%. What it means by 40%? Means if you trade 10 times, out of 6 times you will lose, and then only 4 times you win. So how this will affect your trading? And how can we be profitable even though we only got 40% win rate? Means we open 10 trades, we lose 6 trades, and we earn 4 trades. So with 1 to 2 risk reward and with 40% win rate, we actually lose 6 times, right? So 6 times equals to 6% and 600, but you got 4 win times. So you win 4 times, and then 4 times 200, since it's risk reward to 2, right? 4 times 200 is 800. So the net is 800 minus 600 is 200. So for 10 trades, even though you got 40% winning rate, but your risk reward is 1 to 2. So total you still gain a 200 out of 10,000 capital. Alright, got it? So you still gain 2%. So this is the number of winners, and we expect our profit will be. So we expect our profit will be 200. With 10 times, you lose 6 times. 6 times 100 is 600, and then you win 4 times 200, 800. So in total you win 200. Alright, I think the calculator. Okay, you all get it? So we expect number round of trip. Let's say every day we did one trade. So every day we did one trade. So with 10,000, we have the probability of maybe winning at least $20. I think it's $200. Yeah. Sorry. There's some. So you have to, like, for the, this is 200. Sorry, less. I think less 10 for bottom here. So you have, if your winning rate is 40%, let's say if your winning rate is 30%. So you might have the negative drawdown already, negative 100. All right. So you have to keep, but with 30%, if we increase our risk reward ratio, like we are finding 1 to 3 or 1 to 5, 1 to 3 risk reward means we risk 100, and then we target 300 profits. But with 30% return, we actually still earn 300. With only 30% means you only win 3 trades out of 10 trades. So we need to have a strategy to find a higher risk reward. Let's say a good one will be 1 to 5 risk reward ratio. So the probability of losing 7 times is 700, right? But you only win 3 times out of 10 trades. So 3 times 5 RR, 3 times 500, 1,005. 1,005 minus 700, you earn 800. Just ignore this 80, sorry, because I think the calculator problems is 800. So if we trade one day, each time with 1 to 5 RR, each week have 5 days, we can earn 4,000 but this is the good scenario. I don't think we can have one trade every day. Usually 1 week we got 1 or 2 quality trades we'll do. We only trade quality trades. We don't simply enter in and out. But this I just give you a better understanding about how we control our lot size. So understand this? I hope you all learn something here in how we manage our position size and how we find a better RR, risk reward, and how we earn in the market as a trader. This is just a small part of becoming a professional trader, and we can use this and on trading or any trading strategies. You have like option trading. You all have to plan the trades. Alright. For HK app, Hong Kong app user, don't have CFD, right? But you can consider to use option trading, which is also a certain type of leverage. We all have classes, so